Hi, I'm Fook with Alpha B Group, and today we're going to talk about ISOs and the complicated taxes behind it. It's so complicated that you should just give this video a like right now because I'm attempting to explain something very difficult. So let's start. Oh, let me move my face. Okay, let's get started. It's gonna be long, so bear with me here. So let's start with this graph. Strike price right here. This should be $3. Your grant date is 1/15/20, vest date is 1/15/21. So now remember, when your stocks vest, it is not taxable. It's only taxable when you start exercising, or potentially taxable when you start exercising. So the first thing, let's just say you vest on 1/15 and the stock is now worth $5 at the time. So you pay $3 to buy it, you exercise it when it's worth $5. Now, the way it works is that the delta between your strike price and the fair market value at time of exercise is going to be subject to AMT tax. You're not subject to ordinary income tax. It's only AMT tax, which is a whole separate calculation. Now, the only thing to be wary about is that if you exercise so many shares, or the delta between your strike price and your fair market value price is really high, and you're exercising enough shares to hit you into that range of AMT, that's where you want to be careful. Because in general, for most of my clients that have ISOs, we're going to want to exercise just enough before we hit AMT. And this is where tax planning is very important, because you don't know what enough is. So we could be able to project out your income, project out how much shares you want to exercise for your ISOs, and see, okay, where is that ceiling that we should hit before we break through it. So the next thing is, let's just say you want to sell 2 years after you exercise, right? Here is where it gets complicated. So from your strike price to your exercise date, which is in 2021, you report that as AMT income, and that's really it. Hopefully you didn't hit it. If you did, then you just pay the taxes on it. Now, 2 years later, you sell it. Now, your capital gains, and this is the good thing about ISOs, is going to be from your strike price to your sale price. So this is all long-term capital gains, and this is where the benefits of ISOs come in compared to, say, NSOs. NSOs, the way they do their taxes is not as beneficial as ISOs. So from here to here, that's long-term capital gains, and that's where we're going to take advantage of ISOs, right? Now, you also have to make this adjustment for AMT, because when you sell here, we need to make another adjustment for your AMT, because you already pay taxes from here to here on your AMT side. So now we just got to say, okay, the gain from here to here for your AMT taxes, this is what you should be reporting only. Instead of from here to here, it's only from here to here. Hopefully that made sense. But this is where probably having a tax professional help you out with this will probably be the easiest route, because this is really complicated when it comes to making sure that you have the correct carryovers. Because if you're exercising in 2021, but then you sold it in 2023, in 2023, there might be some carryovers from the time you exercise, in case there's some credits or anything like that, to bring it over to 2023 so you don't overpay in taxes. So another example, let's just say that invested on 1/15/21, but at that time you didn't want to exercise it. All of a sudden it doubles in price a year later. So now you're like, okay, I should exercise it. So this is where you're going to be able to exercise less shares, because there's a bigger delta right now. So from $3 to $10, that's going to be considered for your AMT income. And then let's just say after you exercise a year later, you're going to sell it. So again, same treatment as before. The strike price to the sale price, that's long-term capital gains, but you still got to make an adjustment on the AMT side from here to here, right? So definitely make sure that you are using a professional that knows how to carry over a lot of these carryover basis, and maybe even AMT credit. Moving on, let's just say that you want to exercise and sell ISOs same day. This is simple. From here to here, it's all ordinary income because you sold it all on the same day. There's no long-term capital gains. This is probably going to show on your W-2 as income. Now with ISOs, there are no tax withholdings. So if you sold it at $20 and you bought it at $3, that delta is income and you owe taxes on it. But there's no tax withholding, so you're forced to make prepayments or estimate tax payments on these. And I have another video that explains why you should be making prepayments. So let's move on to another example. So let's just say you just decided to just hold off on exercising for a couple years. Even though it vested in 2021, it took you till year 2023 to exercise, and now the stock is just worth $20. It's skyrocketed, right? So if you exercise here, the delta between here all the way to here, that's subject to AMT. And if you exercise a lot of shares with this high of a delta, this will usually cause AMT tax. So definitely be careful for that. Okay. But let's just say you did this and you exercise at $20. And then you decide to sell when it is at $18. So $2 less than what you exercised at. So for capital gains purposes, in year 2024, when you sold it, you're going to report capital gains from $3 to $18. That will be long-term capital gains. However, we have to make this adjustment for AMT loss because you exercised at $20 in year 2023, but because you are selling it at a lower price than what you exercised at, there is an AMT loss that we have to adjust for. Another situation is, let's just say you exercised at $20 in year 2023, and then you waited a year, it went down, but you decided not to sell. You're just like, I'm just going to wait out. A year later, the stock still doesn't go anywhere, and it goes back up to $20. So 2 years after you exercise, the stock price stayed the same. So in year 2023, you already paid this, you already have supposed to reported this income for AMT purposes in year 2023. In year 2025, you're going to report capital gains from $3 to $20, and that's all long-term capital gains. But because it's at the same price over here, there is no other adjustment. We are good on that. So you don't need to worry about making any other AMT adjustments. But the thing I do want to talk about is AMT tax credit. And this is where it's important to have a professional do this, because you want to make sure that whenever you're exercising in your 2023, and if you happen to pay AMT, there's going to be this thing called an AMT credit, because if you're paying this AMT tax because you exercise ISOs, what you're actually doing is prepaying this tax ahead of time, and the government says, okay, we'll give this money back to you, but we're going to give it back to you slowly. So you pay one lump sum in year 2023, and then you slowly start getting this credit back. And the credit calculation is really difficult. I can't even go through it in this video, but it's really difficult to see how much you need to get back over time, because sometimes it could be zero, sometimes it could only be 50% of it. So definitely something to go over with your tax advisor, because it can get complicated and you don't want to lose out on those credits. Because say if you use our firm in 2023, we calculated your AMT tax, and you decide to use TurboTax the next year, you don't want to use us, but you forgot to transfer over the data of the carryovers, then you just pretty much lost out on all that credit. So when you do sell, you're not going to get any credits back at all. So be very careful when it comes to making sure you're carrying over the right amount. And that's ISO stocks and the complicated taxes behind it. Please give this video a like, because I think I deserved it for explaining all that. But also share it with your colleagues if you think you found this helpful and useful. Our firm truly believes that tax planning is how you really save on taxes, and especially with ISOs, you're definitely going to want to make sure that you do some tax planning to know exactly how many shares to exercise before hitting AMT. Because if you just blindly start exercising and not knowing where your AMT range is, then you're just paying all this extra AMT taxes that might be unnecessary. Be proactive and ask questions, because that's the best way to save taxes. So again, give this video a like, share it with your colleagues, subscribe to our YouTube channel if you want more up-to-date information. I'm off to my next video.